Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Sylvia Jablonski, CEO of Defiance ETFs. Sylvia, great to have you on the show.
Thanks so much for having me.
Absolutely. So, Sylvia, you've called Nvidia the stock of the next century. This is the biggest holding for most investors, even investors who are simply index fund type of investors. Can you tell us why this company and the stock is so important?
Yes, big words, right? But I think that we also are part of, and we're witnessing, the fourth industrial revolution. AI is going to change everything. It's already starting to change a lot in terms of, the way we operate, the way we get information. When that ChatGPT moment kind of happened and people started to really dig into what AI is and what it can do and where it can go, that to me was really the signal that this was going to be a space that, had decades of investment opportunity to it. And, with that, so who's the leader, right? The leader is Nvidia. And regardless of last night, like I know we were all looking forward to Nvidia earnings last night and kind of like what the outcome was going to dictate the market probably in the near term, particularly the Mag 7 and semiconductors. But to me, it kind of didn't matter. It's a stock that I hold and I buy on the dips. And I think it's because, they're the number one provider in terms of both supply and sophistication and just actually solving the problem that the hyperscalers need for their data centers, for cloud, for quantum computing, and for supercomputing. No one has caught up, and it's going to take some time for companies to do that. You're talking about a company that just doubles every couple of years. When you look at the S&P 500 and you look at the like expected annual compounded growth rate for 2 years or something like that, like you look forward and you see like, expectations of like 5%, 5% sales and 13% revenues. And for Nvidia, those expectations are like 40% on both. And so I think that expectations from investors are high, and that's why the stock gets punished. But I thought it was an awesome earnings call, and I think it's just the beginning of the AI revolution. And so AI is in its infancy, right? So we know about like what Microsoft and Google are doing and things like that. But you have supercomputing coming, you have quantum computing coming. AI can be used in, aerospace and defense, cryptography, the healthcare industry, both pharmaceuticals and research. And just again, like they're at the forefront of this whole thing that is just about to explode. And so that's why I think it's the stock of the century.
That's great. And it sounds like you're really bullish on the stock. I noticed it nearly tripled
Yeah.
on a year-to-date basis. Does that mean there's still more upside to come even after this huge move we've seen in 2024?
I think there's definitely upside to come. If the information that we're getting is accurate and the Blackwell chip is, kind of the be all end all, and like you think about the revenue numbers that chip itself can bring in, which is like 5 to 6 billion or more. We're in round one, right? I think that the Blackwell benefits are going to pay out next quarter. And so, again, if we listen to Jensen Huang and like what the both the supply constraints are because of the, outsized demand, then, you have to think that the stock has a shot of really growing over the next couple of years. And if even like I was looking at it this morning, I couldn't like find another stock just or off the top of my head, think of another stock where no analyst has a sell rating on it. Some have a hold, some have buys, and the price ranges differ, but like no one wants to sell it. So that's good news.
Yeah, yeah, absolutely incredible story. And it certainly seems like Nvidia has a lot of upside. How do you think that ETF investors should be getting exposure to this stock specifically and the AI theme more generally? I know the
Yeah.
S&P 500 has a 7% weighting in Nvidia, the Nasdaq 100 even higher, 9% weighting. Do you think investors should supplement that, or is that enough?
I think it's so interesting because it's like there's two ways to think of it. If you don't want to have an over concentration necessarily, but if you really want exposure to a name and a theme, I think you definitely hold this stock, right? And if you have high conviction on intraday price moves and short term activity, you can buy Will's Will's ETF, right? The NVDL, like the levered one. I mean, that's a good way to play it for tactical advisors. But if you want exposure to the overall theme, we have one. We have a quantum ETF. It's AI machine learning. It has Nvidia, but then it also has like IonQ and Qubits and Qbot and like all of these names that are actually, rip roaring right now. But that gives you broader exposure to the semiconductor trade, but also, all the facets of AI and machine learning. You could do it that way. To your point, if you just own a broad-based index, you have exposure. But I think with a name like Nvidia, I mean, the single stock thing is going to be pretty popular right now just because of how well it's doing.
Sylvia, you mentioned QTUM, one of your ETFs. You have a really interesting lineup of ETFs. I'd love it if you can tell us some of your, most interesting funds, the ones that are getting traction, because you have everything from
Yeah.
QTUM to XMAG, which excludes the MAG 7. You have single stock ETFs. Could you tell us a little about your lineup?
Yeah, sure. So, in 2022, we learned the hard lesson of concentration risk, right? The tech pullback came and we had AI funds, machine learning funds. We had a 5G ETF. It's now coined 6G. And we were all tech, right? And so the market pulled back. And I think as you grow as a company and we began to like invest in the ETF marketplace and understand more about what investors want, we thought about how to diversify, right? And so we went to launch enhanced options income products, which was more of like a buy and hold, non-tech play, just for those looking for alternative income. We built out the leverage product suite. By far, the most interesting ETF on the planet right now is MicroStrategy, and we have MSTX, and it's traded like over 1.5 billion shares in the or in AUM over the last couple of days. Trades like millions of shares a day. It's massive. There's so much interest there post-election, I think, because of crypto deregulation, things like that. And then to your point, XMAG. So it's kind of like the conversation started the way we talked about it, right? And as you said, like S&P 500 has 7%. We have so many clients asking us, like, we love our MAG 7 positions and our semiconductor positions, but we're so concentrated because we have the single name, we have S&P, we have all these thematic ETFs. But we want to keep investing in the market. Like, what do we do? And we thought, like, this is so simple and it doesn't exist. Just take out the top 7 names, right? And then what you're left with is market cap ratings. So the next runners and flyers can fly, right? We totally believe in all that. But their names like, Costco, their names like Eli Lilly, Broadcom, Vistra, Constellation Energy, like just some of the Palantir is another one, right? Like some of these names that are really running up and they don't have that, big of a position in ETF, and take out the Mag 7, all of a sudden they do. So it's just a great way to diversify your exposure and concentration risk in the Mag 7.
Fantastic. Well, we're going to have to leave it there, Sylvia. It's been an absolute pleasure. Thanks.
Thank you so much.